This is Justin Pulitzer. This is my weekend review video for the week ending February 22nd, 2015. However, it is being shot on February 21st, 2015, because I'm going to be away on vacation this week. So I won't be on the stream as much. However, I will be checking in. So if you have any questions, just allow a little bit of time, extra time for a response, but I will be checking in. So with that said, let's jump into the video and go over the levels I see as important and what might be happening going forward. So as you can see, SPY had been in this 100% retracement mode, and I had discussed that we had this equal low here to the tick of 197.86, and that told me that the market was still in a responsive mode as opposed to initiative, just meaning that short-term money is in control and not big funds really unloading. And you can see we here ended that 100% retracement pattern with a successful hold of the 50-day MA, backside of the prior down channel, and extension higher. And it formed what is known as a W pattern. So what now? We consolidated all week, and then on Friday had a violent move up to break the range, sort of to take out the stalemate. The way I see it, there had been a algo-driven spike here a few weeks ago, and I had discussed that those numbers get cached by the algos, and then they want to get retested. Think about like flash crashes. This happened to be a flash crash up, which is I guess a quote-unquote high-quality problem because most people play long. So I'm thinking that this 112.97 is probably in play, and that also coincides with a 1.618 Fibonacci extension from this move here, this high, this move down. That would take it up to 214.17. So if there's going to be continued upside, that to me is where the market price might take the market. However, there is possibility of downside, and we always have to keep that in mind. And the levels that I see as important for critical to hold would be Friday's low of day, first of all, because this was sort of like a bit of an outside day. It went down and then up and then closed up at the highs. So that low of day, number one, is 208.73. And you can see that roughly coincides with this rough breakout area here of 208.97. So as long as we're above that level, new highs, still higher, are in play. If that low gets taken and we do wind up drifting back into range to kind of retest the breakout, then I see this 207.84 as sort of a cautionary zone. If we start getting below there, I think anywhere between this 207.84 and 208.97 is still pretty bullish. However, we may want to come back and retest this breakout zone of 206.42. So it is conceivable on some type of a news like maybe Greece, the bailout fails, or I know that the ceasefire with Russia and Ukraine seems to have crumbled. We may have some type of a liquidation break that takes us down into here. One of the reasons why I also think that is possible is because anytime we get about 5 or 6 points in SPY ahead of the 20 MA, it's sort of extended, and as of the close on Friday, we're about $5.45 extended. So it's possible that we could have some kind of a blow-off move. I mean, don't get me wrong. I mean, all the shorts here are wrong. Anyone who's ever been short is wrong, and we are coming up high. It could just continue higher. However, if we do wind up drifting back down, or wind up getting into some type of a slow grind chop, that might give it a little bit of time for the 20 MA to catch up. So I see a pullback as possible, but I do think that the market seems to be wanting higher prices. You can see on the major averages, it's just been bullish consolidation. Every pullback here all week, you can see how the bodies closed. They were all fairly strong, and it did resolve higher. So as of now, that seems to be the case, although I would be mindful that there is some type of a pullback possible into this range. As long as we are in this range, we are still in the upper distribution. I would start getting a little bit more cautious if we take out this 205.38. Anything below there, I think we could be in for a bit of a tussle, as the Brits might say, or the Australians, or anyone who's not American. Anyhow, that's SPY. The diamonds also showing something similar. We had a bit of an a pretty big outside day on DIA. We came back down, we filled this mini gap, and then ripped up higher and took out the whole week and closed up at the highs. And we cleared the old reference high of the 108.71. The fib extension from this move here just takes it a little bit higher to 182.62. So it's conceivable we do go a little bit higher. I have some levels here highlighted for potential on a move lower retest. I would say if we lose the Friday low, we'll probably come back and test the 20 and the 50-day relatively quickly. We may have a little bit of a pause point at this volume distribution here at 177.57-ish. I would say anything in this area is still considered the upper distribution, so diamonds looking fairly bullish as well. IWM, kind of same story. 117.37, I had been saying was anything above there had been a little bit unsustainable. We are now kind of coming back up to kiss the backside of this prior uptrend line, which had been, you can see, sort of support here, a little bit of resistance here, a couple of times here, again resistance, and now we're coming back up into it. So I would say IWM really needs to hold for higher still over this 120.97. If we do wind up coming back down, I still think it's kind of okay as long as it holds this 119.39 breakout area of this range. You can see this is where this spike came up and failed, and then we struggled there. So anywhere in here I would say is support for buy the dips if we do wind up coming back down. And if we do wind up having some type of an extension in IWM, a Fibonacci extension, and I mean for like the last 2-year range, we would be talking about the first one being up at 125.71, which is the 1.272 Fibonacci extension, and then the big 1.618 is up at 131.75. So it is conceivable IWM has some type of a spike move. We are in a channel, though, if you take a look from this low to high here. So we didn't quite reach it here, but we are mid-channel, and we are also at the backside here, so it is a little bit cautious, but I do think that this seems like it does want to press up and get to that channel. It may also do something like just grind and slowly work its way, with this being sort of like a bit of a regression line. I could draw one of those in. I didn't here, but my guess is it would look similar to that. So these are my upward targets if we do wind up resolving higher. If we do wind up pulling back into range, as I said, that 119.39 is the first line of, really this 120.97 to 119.39 is the first line of support. Anything up there, still upper distribution, still okay. I would only really start getting nervous if we took out this 117.37. We are pretty far away from there, though, so this would be a pretty painful move, but it would also coincide with the channel low. So it is conceivable that we do wind up having some type of a dramatic or more pronounced liquidation break to retest here, but like I said, we do have reference levels, and if you're long, you'd be stopped out way before that, so the pain wouldn't get too severe. If you're looking for buy the dip, we now know the levels to do. I would go in heavy long here for RORO. And there's a lot of discussion on the stream. I keep talking about RORO. What does this mean? It just stands for right or right out. There's just meaning that you buy it right at this price. You're either right away, or you are right out at a small loss. You don't want to really give that too much room. If these levels here don't hold, I would say it could have an intraday violation of a few cents. Sometimes the market, comes down and momentum takes it a little bit further than it needs to. But if you're starting to close below this for a day or two, your play really isn't working out. I mean, I like to give trades some time to work. But if you're, 1% or 3% below, I mean, that's starting to get a little bit too much, and that means that the trade is invalidated. So right or right out just simply means right or right out, RORO. If you have any more questions on that, feel free to ask me. I'd be happy to make some clarifications. Maybe we'll even do an example, maybe in Facebook, actually. When I get to Facebook, we'll discuss RORO a little bit more with an example. So let's go on to the Qs. As we all know, Apple has been an absolute beast. The Qs have performed, right? They've they've been pretty strong, actually. I think they're the strongest. If there is some type of a pullback, the first reference is 106.25 to 105.26. Anything up in here, still upper distribution. Could even pull back to retest this 104.58, which was really the breakout of the W pattern. I could see something like that happening on news if there's some type of a liquidation break. However, there is something that a lot of people have been discussing, and that is the old high of the NASDAQ, which was from the dot-com days. And if you take a look, it drives me crazy that still shows. You can see that's up here at 120.50. And if you're long, you probably are thinking that we could be going there. It's very conceivable. Why not, right? I mean, the market has all the other indices have broken all the old highs. So to me, if you're long, that should be your target. It may be a little bit choppy. I highly doubt it's some type of a straight shot, although with the way Apple and some other NASDAQ stocks have been behaving, it's conceivable we do just go straight up. But take a look at these levels. These are your support levels that are key, and any violation, I would say, of this 104.58 gets me a little bit more concerned that the rally may have, I wouldn't say topped per se, but this move here might not be as legit as we thought it was, and there'd probably be a move back down to retest the 50 and maybe even this secondary trend. So that is my thinking with Qs. Apple, one of the main culprits, so to speak, for this move happening. So I had been talking about for a while any break of 119.75, putting the full Fibonacci 1.618 fib extension of 128.97 into play, and we got it. Hooray! I was taking some profits all the way from 125s all the way up to here, and taking slowly legging out. I'm pretty much all out of Apple at this point. You can see we are at a channel top, and also that Fibonacci extension. However, with the way Apple is behaving, it's conceivable that we do some type of a move to get to this, I guess, trend line, upper resistance line, and that really comes into play up at 135s. And the longer this takes, the higher that goes. So if it were to do something like open up huge on Monday and run, that's where it would potentially stall out. So I'm thinking that that's possible. The other scenario is Apple does something like pull back to retest the breakout of 119.75, and that at the very least is again a right or right out long. And I would say to do it in size as well, because if you write and it bounces, it's going to probably come back up to retest the old high or at least make a higher low, and it'll do it probably fairly violently because anyone who's missed Apple now knows that this was the breakout. So I would say somewhere between 119.75 and this 118 area, which was sort of where this earnings gap high, anything above there is, hold on, what was that? 118.12. So anything between 119.75 and 118.12, that area is a right or right out for a long. Now, Apple, in my opinion, is always the most bullish when it is over its 20-day moving average, and you can use the 20-day moving average also for a buy point. So if Apple does something like just chop here or then comes back down or takes its time, you could use the 20 for a row as well. However, I really would love this area. If you're playing long in Apple, I would say the safest way to do it is to do it protected with either long options for your hedge, because the implied volatility isn't historically expensive. Anything below 25 anything 25 to 26 is basically average. Anything below there is cheap. So you're not paying up for Apple Premium. So if you want to play for this move higher, do it with some long calls or maybe some call spreads. If you want to play for lower, you can do short the same way with some put spreads, or if you want to play protected, hedged, you can do something like be long the shares and then long some put spreads. That to me would be a great hedge in Apple. Amazon looks like it wants to retest the old highs. That's 408.06. It looks like it is first actually on Friday breaking that range, so I would easily see this could easily do something like move up higher, particularly if the market stays strong. If it winds up having some type of a pullback, first level to be conscientious of is obviously these lows here, and that would be your tip-off, I think, that this pattern is invalidated. So anything below this 372.85 is suspect, and to me would put 358.61 into play, and possibly the backside of this this sort of old trend line. And I would say that that's a good right or right out spot, actually. Again, row, because that takes you into like the spike of earnings, and it also is a reference with these highs as well, with this where this gap had filled before. So I would say that area somewhere between 358.61 and this high here, which was, what is that, 349.38. So somewhere in that area, as long as it's still contained within the opening earnings bar, is okay for row. Anything below that low, 340.74, it puts the gap fill into play. So you want to be real careful with that if you lose this this range of the 340.71 to 359.50. Anything in there to me, row. Anything below there, GTFO, which means get the F out. Simple. American Express, discussed this one being on primary trend. I don't see how the news in this stock could get any worse. I mean, every day there's like something that comes out. However, we're pretty close to a gap fill. We have some reference lows here. It's been down hard and chopping. This was the downgrade day with the losing potential monopoly, and then Friday we just kind of rallied back up. I think if Amex gets back up into like this range, it's probably going to be some area that it's going to have some resistance. It's also a volume distribution somewhere in the 81s. It's also like, if it takes its time to do it, primary downtrend. No real reason to go in size here, although if you want to start nibbling, it's okay. If these lows fail here, since they were so close to the gap fill lows, I don't necessarily know if this is going to hold, and we may want to fill another gap down to 72s. So for me, if we lose 77.12, the play is then to 72s, and there I think you can actually get more comfortable buying the stock in size for some type of a rally back up, maybe to like 78 or 80. So that is American Express. MasterCard, also in the patch, breaking out, looking strong. Anything over 89.87 to me is bullish. If there's some type of a pullback into like this range, you could probably do some type of a right or right out play as well. Visa also bullish. They're splitting their stock soon, 4-for-1. I'm guessing it's going to stay strong until the split, so there's probably more upside. It looks like it's already starting to break that consolidation pattern as well. That's Visa. BABA, looking pretty weak. Still has the YHOO share overhang looming large. I think it's a right or right out type of a play somewhere down near this 82.81 if it has some type of a move down, and you can buy it there for some type of a move back up, and that would be a good trade location. I wouldn't risk more than maybe like a point or so if you're going to do that play. YHOO, I also think, is setting up for some type of a right or right out, although I would have liked it to have come down a little bit quicker. I'm looking for somewhere around this 42.5 to the gap fill here, which is 40.18, which would also coincide roughly with the lower part of the up channel. So that's what I'm looking for with YHOO. If you're long, anything contained over, I would say over this high of 43.80, you can still stay long. Anything below there, this scenario is still in play. Stocks have been funny. They like to rally ahead of time. Maybe it just decides to take off and fill up this gap. Although this weakness to me is pronounced, and we've had a lot of market strength. Maybe we do get that set up there for the long. So maybe it'll also do something like coincide with the 200-day moving average, which would be nice. You can see it held here with a slight intraday violation. So maybe it does something like come down a little bit, overshoot to the channel, and then it's a buy. But you can see this area is held multiple times. I would think this is a good right or right out area for long. If it fails and breaks, you can flip short very quickly and play for the filling up of the triangle back down to 36s. Another way to play this here would just be to outright sell puts below and maybe try to get somewhere in 36 and 37 as your short strike for those puts. BIDU is another one that likes to get discussed. It's been a little choppy. It traded up outside the channel on the upside. Maybe it does something like get down below the channel now for for an overshoot there. I think that this area, I think 191 was the low after hours on the earnings day. It kind of rallied back up, found resistance here. You can see there are a lot of dead bodies up here of people who tried playing long. I would say if there's some type of a rally up to this downtrend line, it's a good right or right out place to short. Or if you want to try it again, I would say if it came up quickly here, it might not be a right or right out. You might want to wait for the downtrend just because we tested there, backed off, and then would be coming back kind of soon. But you can see all the major moving averages up here. There's a lot of volume. I think that this is going to be a little bit of time. I would like to buy it, though, on some type of a successful retest of this low of like this 199.70. Like you can see we stalled Friday here right at the 200 MA. It's just been kind of bubbling under it the last couple of days. So to me, this is showing a lot of relative weakness considering with that chart of the NASDAQ we saw. So it may do something like want to come back down here and retest this area. If it does, we know the right or right out levels, this 94s, the 91s, potentially this 99, wherever you feel comfortable. Maybe just sell some out of the money puts, somewhere down in like this 170 area. If it came down there, it may juice up a little bit. That is my thinking on BIDU. Okay, I stopped the recording to clean up this chart because it had too much stuff on it from my actual trading, and I wanted it to be as crisp as possible because this is a really important chart setup that I want to show you guys and why this was such a success and why this worked. If you take a look at Facebook, it had made a high here, went down on earnings, really just chopped around, and then had this like spike up move to new highs, which happened to be a fib extension. The 182s stopped maybe just short of it, and then wound up selling off pretty hard and has just been back in this chop range. And I've been looking for this stock to go higher. I'm fairly bullish on Facebook. You can see it's been kind of chopping on this long-term uptrend channel. It's been trading on either side of it. And on this day here, you can see, I want to just show you this pattern because this is a really powerful pattern and can play out in the future as well. You can see this day we opened low, rallied up huge to right up to basically in a straight line to the 50-day, and then backed off hard and sold off. And I think what happened here was a lot of shorts who initiated this day put their stop right of the high of the day this day. That's really what I would do as well, which was 76.91. And the next day, we had a higher low, closed above the Wednesday high, and really pretty high into this reversal day wick, into the kind of the excess area. And my screen is frozen. Wonderful. Anyhow, what happened? Here we go. What happened the next day was what really got this pattern going. You can see we had a gap, and the gap was, even the low of the day was still above the high of the day of this reversal bar. And what I believe happened was all the shorts who had put their stops here were trapped with this gap, and it was a gap and go. And I had discussed it in the pre-market that this is what I was looking for to happen, and boy did it. It took out all of the reference areas that were a key. It took out this reversal day, it took out this high of range, it took out this high of range, and closed in on what was the old high before this high. And it stalled there a little bit. The next day we had some follow through, and I think we just got kind of caught up in options pinning. And that's what really held back Facebook here from maybe going a little bit higher. This to me was good. Look, it's still closed positive above the high of this day. So I'm still constructive on the name. I do think that if there is some type of a pullback, somewhere in this area between 78.27 and 78.62 is the right or right out buy for a move back up. However, it wouldn't surprise me to see like a little bit of sideways consolidation and then maybe even higher, or maybe even just higher straight still, just because of the power of this move. And I had discussed on Shadow Trader when I was on the other day that I was looking for it to retest these highs, this 81.16, this 82.17, which was the old high. But what I'm really looking for is for this to have some type of a move to the upper part of the channel. And obviously you can see if it did it on Monday, it would take it to 97. I don't see that happening, but what I do see happening is it doing it over time, and that taking it to my target that I had discussed in my 2015 predictions to take it to 100. That's really my target in Facebook, and that's what I'm looking to happen. I'm looking for it to, over time, it's not going to happen right away, and it's going to probably be choppy and hard, But I am looking, since we have great trade location here, for this to get to 100. I will be looking, obviously, book some profits at 82, and maybe if you look at this prior kind of uptrend resistance line that's come into play many times here, that also coincides with the 1.618 fib extension up near 85s. You can see, I think that area will be some resistance for sure. You might want to trim a little bit there and then maybe play like on some type of a pullback to buy back here, into this range. But I'm going to hold a lot of this for a while unless, I'm proven wrong and this is completely taken out. That's really where my stop would be on most of it. I am looking for that move, so that is Facebook. So again, the key thing here was this taking of this day's high with the gap, and then that trapped the shorts, and then that was what caused the gap and go, and that's Facebook. If you have any questions on that, feel free to ask. Maybe I'll do a dedicated video on it if there's enough interest and this kind of isn't enough to clarify it. But that is how I see Facebook. I do think higher. Twitter, I've been saying I think is going to be choppy. You can see it did find resistance up close to this, up near $50. 50.09 was the IPO high. I do think that the path of least resistance for Twitter is still higher, although for it to really get going, it's going to need to have a second good earnings report, and I'm going to discuss that in a second. You can see we really just filled the gap here from this disaster, this debacle that came down here, and I think it's just finding some responsive sellers who were trapped up here. I think it's possible if the market stays bullish to maybe get up to this 53.64 and maybe the 55.99, which was the old high here. However, I do think that it's also likely that it could maybe chop in this range and do something like this and look just really ugly. So the easier move might be to sell some out-of-the-money puts as your long proxy. If this earnings report is good, and that's the second one, it would be two back-to-back, then I think, and this is going to be a bit of a big call, it's kind of sort of if this then that, like it kind of has to happen for this to happen. But if this second report is good, I think the old highs are in play. I think the stock will come back up to fill this gap to 65.97 and maybe get up to 74s. But this does have to be good. If it's bad, we're coming right back down into this chop range and may even really, really, really collapse, because that would be the second disappointment. Like this one was good, got everyone excited. Crap, back down. This one again got people excited. This would be again crap, back down. But if it is good, and I think it's potentially possible, we could really retest these highs. So that's my thinking on Twitter, and that's how I'll be trading it. But in the interim, I think it's going to be really choppy. So no rush to, I would say buy the dips. There's no need to chase here. So that is Twitter. FireEye. Wow. I had discussed this making higher highs and higher lows, and I thought that I had discussed that with the James Franco movie, the interview, that this thing was probably going to go higher. It's back up to the IPO, near the IPO highs here, and it's getting a little bit extended. You can see it's testing on the upper side of this channel. The stock is pretty bullish. I think it could really go a lot higher, actually. This is another one that has a lot of time. You can see it's just kind of coming back up. I think it could get back up to this like 52 area. It may even want to go higher. I would be a buyer. If you're not in it already, don't chase. You're not going to have great trade location. You want to do something like buy it back close to like the earnings gap range or the backside of this old up channel before it got really extended here into this up channel. So if you could come back into this area, in like the 40s, I think it would be a bit of a buy. If you get a gift of a gap fill down in the 36, I'd absolutely be a buyer in size for right or right out. But these stocks, I think, are getting a little bit expensive because they have huge short interests and they're really getting going. But I do think that they're buy the dip stocks now. I just wouldn't be chasing on the outside of these channels. CYBR, same thing. This thing is also, I would say, a buy the dip if you can get somewhere back even into like this 47 area. I'm not sure if that's going to happen so easily. It's a small float, but what I am noticing is that we're getting kind of close to 2 times the range. You can see this from this 22.12 to 47.01. If you just add that, take this point amount and add it onto the top of the range, you wind up getting up to the 71.90 would be the area. It's basically adding on $24.89 to this high, and that would take you up here. I think that this is getting extended. It's late in the game. I think you'd be looking to buy this more back into this range of the opening area. Maybe I'm wrong. Maybe the thing just takes off and wants to get to 100. You never know with these momentum stocks in a bull market. But I would say that the danger sign now is flashing if you are still long from good trade location. I'm trying to show you the area on the chart. The bubble is annoying me, but you can see the 71.90 would be 2 times that range, and you probably do want to take some profits here. I think the stock could even set up for a good right or right out short close up here as well. I usually don't like to pick tops in stocks, but this would just be a technical, really don't give it more than, maybe $1 if you're wrong. That's my thoughts on that. Google, not behaving well, although not behaving really too poorly either. I had discussed playing this with a call spread, risk reversal, basically just selling puts to fund a call spread. I took profits. Actually, I got lucky. I took them here, and the stock reversed, and you can see pretty big on a pretty up tape, and it's just been kind of like floundering here. It's still sort of with this was sort of an inverse head and shoulders, cup and handle. It may still be forming out the handle, but on an up tape with the NASDAQ making new highs and this kind of looking a little wah, I wound up taking off the balance of my short puts. If this does wind up coming back up and taking back out the 545, I might duke it out with shares, actually, because it would be a good row spot with like this area here between this 543.93 to 545.41 is your right or right out stop if you came down. Like if this came up and this was strong on Monday, your reference stop is below the low of Friday. Anything below that 538.10, it's probably going to collapse and come back down to like this 525 area. But anything above there, I think would get the move going higher and probably get you to the 200 MA, which is this 558, possibly 567.45, and then maybe even 577 if the market is so inclined. And then that area I think would get some resistance because you can see that's a bit of a beginning of a big volume distribution. So that's my thoughts on Google. I'm going to have to skip a few because this is going to be too long. Las Vegas Sands, I had discussed this the last time, this breakout bar. If we can take the 61.60, I'd probably add. I think it's going to get back up to fill up the triangle to the 65. The pattern was just that it had fallen out of a long, pronounced uptrend, had a failed check back here, came down, but with higher lows, and then took out the check back high with big emotion and is now just consolidating. Still looks good to me. I think Las Vegas Sands, good. Netflix, similar as Amazon. I think that this thing is looking like it wants to retest the old high. We're like within spitting distance. The extensions would be up to 536.55 and 596.67. I do think 500 would also find some sellers at least the first time. So you might have some type of a overshoot over here to 500 and then a pullback. These are the levels that I see as important for 67.99, 457.38. That area is really key. Anything below there, you're really into this chop range, and you could have the 441 in play, which is the big volume node distribution here. But this to me is looking like it wants to go to retest the old all-time high and probably even higher than that. So that is Netflix. Priceline, monster day. I had said that I thought that this was going to be a long setup. It was a little bit harder since it had rallied into the print, and it did like a 2x move. It was supposed to be like a $40-something move. It moved almost $100. Friday there was a little bit of profit taking. I do think that there's room to this primary downtrend, which is close to, let's see, 1267. So somewhere between 1267 and if it does it the next day, like close up to 70. So somewhere in that area, 1267 to 1270, I think there is some room. That would be a good right or right out short spot considering it came up so hard and so fast. But I do think if you want to play this with like some type of a call spread or risk reversal, that would be okay. with the caveat that if you lose the earnings gap low of day, you've got to be out of that, which is 1195.36. Then I would think that the 200 is in play for some type of a rollback into these highs, and then you could even do a write or write out long there, or if you want some type of a put ratio, maybe playing for the gap fill. But that's how I see Priceline. It still looks kind of bullish to me. Tesla could be setting up for some type of an interesting move. You can see it had been down on a conference call where I think Elon Musk was either drunk or high because he was just like giggling about higher expenses. The stock did nothing but rally that whole day, and I had said a stock that can't go down will go higher. It also was a higher low than here, which was still a higher low than the prior reference low. So we may do something like come back up and test the channel high, but you can see the frequency of the touch now is getting kind of quick. And I think if we took this high, which was the 225.48, I think that somewhere between there and the 200 MA would be a good target now. But I do think that if we broke the channel, that this area probably would not hold it, and we could see the 545s and maybe even back up to fill up this triangle all the way up here to the 257.70 area. So there was a lot of I would say this was a distribution node, so the first high area I would think, and this was also the gap down area from this break. So I think the 245s, 89s, and then 257.70 would be the next target. So if you're looking for a move on a break here, I think that those are the near-term targets. Anyhow, with that said, let's have a good trading week. And I will be away again. Please follow me on Twitter. I will be checking in on the stream. Just allow a little extra time for a response. And if you like this movie or this video, just hit the like button. Cheers.